It's not because I don't think Disney's a great company. It's not because I don't think Bob Iger is a great CEO. And it's not because I don't believe Nelson Peltz can create tremendous value there as a director. It's because the company is about to embark on a costly and disruptive proxy fight. And there's just no reason to own the stock during that period. After the fight is over, I would certainly re-explore it. And I think if Nelson does get on the board, it would definitely be a buy at that point.
All right. So if he does succeed, then you would jump in alongside. And
yes.
By the way, I'm sure plenty of people agree with you about that approach. So let's shift gears then to 3 buys that you do have in the universe of companies you track with activist involvement. Freshpet, we don't talk about that one a lot. Jana's got a 9% stake. They've told Freshpet they plan to push for board seats this year. The shares are up 5% in the past 3 months. Not huge, and they are still down more than 30% in the past year. Why is this a buy for you?
Well, first off, it's a great product in an attractive market. This is, if you're not familiar with the company, it's a refrigerated pet food company that sells premium primarily dog food. But they have refrigerators in the pet aisles of retailers like Walmart and Kroger and Target, and the Pet Fresh actually buys, maintains, and stocks these refrigerators at no cost to the retailer. So the companies love it because they're able to generate revenue without using any of their existing shelf space. And it's a great moat for Freshpet that it makes their peers very difficult to compete with.
Okay, so Freshpet, a buy for you. Your next one is Crown Holdings. And again, this is why I love this. These are not names we talk about every day. But Carl Icahn has 2 board seats. It's a beverage and packaging company. He did this just last month, by the way. An 8% stake in the company, says shares are undervalued. You agree?
Yes, I do agree. And it's not just Carl Icahn in this. It's Impactive Capital. The 2 are not a group, but they are like-minded. They both want the company to sell the non-core businesses, buy back shares, and focus purely on the beverage business, which has secular tailwinds. 75% of new products that go into cans today versus 30% in 2014.
What is, I mean, I don't know if he expounded on this, but is the macro environment creating an opportunity here as well? We've had so many different supply chain and inflation issues in the pipeline. I don't know if that's wreaked havoc on the stock.
Well, it's affected the stock. During COVID, there's a lot of cans. People weren't going to restaurants; they were buying a lot of cans for their house, and so that's they're dealing with that now, coming out of COVID, and inflation is hurting it as well. But there's just a secular tailwind to the move from plastics to aluminum, which is the most recyclable material out there.
Sure. So Freshpet, Crown Holdings, your third buy is Dollar Tree. They expanded their own board last year after an agreement with the activist investor Mantle Ridge. We all remember that one. They're the 3rd largest shareholder. They added a slate of executives, including a former Dollar General CEO as chairman. Unlike these other names, Dollar Tree is actually up 10% or so in the past year, but you think it still has room to run?
Absolutely. I mean, it's just starting here. The plan here is for Rick Drawling, as you mentioned, the former CEO of Dollar General, who's been brought on as the executive chairman here, is to, at the Dollar Tree stores, move from the $1 price points to higher price points from $1.25, $3, and $5 price points. It makes no sense to continue $1 prices that were established in 1986 when there's inflation. But not only that, having more price points will allow Dollar Tree to offer a more relevant mix of products to its customers. When customers go for back to school, they can buy their pencils at Dollar Tree and they can buy their pencil cases, but then they have to go to Target to buy their backpacks.
True.
That's not going to be the case anymore, where Dollar Tree is just going to be able to merchandise the stores in a way where they can also sell the backpacks for $5 as well. For
all of these holdings and in general with fights like these, even where you think the investors are going to push for positive change and all the rest of it, what kind of time horizon do you either look for a specific time frame, a year or 2, 5 years? Do you just kind of wait for the campaign to come to a conclusion? How should people think about exiting these?
That's a good question. Well, different activist catalysts have different time frames. So let's look at Freshpet. There's an operational catalyst there that could play out over years, and Janet can get some board seats and really create value over the long term. But there's also potential at acquisition of Freshpet. I mean, pet food and baby is the most attractive segments of the consumer packaged goods businesses, and it's very hard to grow that organically. So the activists, they have fiduciary duties to maximize shareholder value, and they might go in and sell the company, which might be an easier way to go.
True.
Something like Dollar Tree Somebody like Mantle Ridge, they're unique in that they're not a hedge fund. They have locked up money for many years, and they don't even make a performance fee until they exit, and they make the performance fee on exit. So they can be in this for a long time. And in fact, part of their strategy with the Family Dollar stores will hurt revenue in the short term, but should generate long-term value in the long term. So they're able to do that with their structure.
Yeah.